As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward.
The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
But isn't that a good thing though? Because you have more liquidity.
No, it's very good.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets.
Welcome everyone to the Kendall Report. Sorry I'm late. Believe it or not, this is a rain delay that we're dealing with. It finally died down. It ended up to be good timing for the moment. It was so loud in here I couldn't even hear myself. So I apologize for the late start. I just wanted to tell you folks that I'm very grateful for how much you folks have embraced all of my work and everything that I do on this channel. I'm very grateful. We've sold a lot of indicators and still going strong. This is the final day of the sale that we started on the launch, and yeah, the thunder's starting to come back in here, so we'll see what happens. But I just want to tell you that I'm really grateful, and we have a lot of plans, and we're building a pretty substantial community, people that are going to be like-minded, using the same kind of tools and things that I use. I think it's going to be really exciting. We're planning on, as I told you, some live seminar type things, virtual, and ultimately a live meetup, probably in Vegas sometime next year. We're planning a whole bunch of stuff. But the big announcement tonight I want to make is we are launching an affiliate program with the indicator. So not only can you make money trading, you can make money in helping us to build this community, because there's something special going on here, folks. And here's what I'm going to tell you about this, is that not everybody will get on board, but if you're interested in becoming an affiliate of this channel, there's going to be a lot of benefits for being part of that group. Send us email to info@Kendall Report, but I also want you to give me a video telling me why you think these indicators are amazing and that you want to be part of this group. And the plan is that we will have a meeting next Wednesday, a Zoom meeting that you'll get a personal invitation to. And if we get a lot of responses, then we'll probably do a couple meetings. So we'll be reaching out to you via email. Make sure you put your contact information, phone numbers, and those type of things as well. This is a substantial program we're putting together, and it's not a little measly little payday. I'm not going to put any numbers out here on the internet, but it's a very valuable program that I think what we're planning on building as we come into next year is some really serious environment for setting up trading environments and other types of user groups, and hopefully we'll get the Discord going at the next level, all kinds of things. I'm not sure how the ultimate configuration of some of these processes are going to be, but they're going to happen. And certainly this week has been pretty substantial week for that. So those of you bought the indicators, do it. Midnight tonight, the pricing will change. There'll be a new offering out there. So just know you have till midnight. That's Pacific time. So that would be around the London opening. So if you're watching this in Europe early in the morning, then you still have the opportunity. But thank you again, folks. So let's go ahead and get into tonight's video. I feel this is really, I needed to start tonight's video off with this announcement, and I think you're going to see it's going to be pretty substantial. We actually have some influencers and some other folks that are coming in on this, so it's going to be a pretty big launch. I'm really excited about it. Just go on for just one more minute. Is when I first came out in front of you folks in 2020 in the pandemic, I never really considered we have really a strong retail and institutional community that's building. It's pretty amazing the people I've met on this channel, and I can't wait to meet many of you that are out there listening and watch me every day. So I think this is going to be an exciting phase of development here. It's just kind of come to us. It's beckoning us to do this. All right, so let's go on. Into the markets. Okay, folks, here we go. Friday is a big day. We've got employment numbers coming out. Nothing really, it was interesting today because we really didn't get any big movements. We traded S1, R2 today. We finished down around the low on S1. So this bases the S&P 500. But overall, it was just a really sloppy day. Nobody was looking to get ahead of this employment numbers. Nothing that came out. PCE came out 0.3. On core, it was 0.2. Year over year is 3%. Everything was pretty much in line as expected, although the year over year seemed to come in just a little bit better. And I think that everything is built in right now. I think, like I said, no one wanted to get ahead of this employment number, and I'm not even sure that's going to be material. So we also got the claims came in on the week over week. We got a little hotter, but the continuing claims actually dropped 160K down to 1.697. So, and there was a revision last week as well. So this employment situation just continues to be solid. Like I said, when we talked, the biggest reaction to a report that we saw this week was the JOLTS report that we got the other morning. I think it was at 1 o'clock New York time, I think is when it came out. I'm not sure about the timing of that. But the bottom line is, what we're seeing here is that report is kind of a bogus report. I've talked about that, in that it's required on how many people are responding to that survey. And evidently it was very light. So like I said, that number could jump back into 9 million something next week, and everybody will be scratching their chin wondering how that happened. Well, that's what's been talked about on a number of different sources. So let's go to tomorrow. Employment's expected to be unchanged at 3.5%, 187,000 jobs. I think those are non-farms that are coming out. Everything else, all the other metrics are expected to be unchanged, no real changes there. And I don't suspect we're going to see much. The ADP report was a little bit off, but I don't think that even matters. There's not a high correlation, although saying that, we have seen where there is a higher correlation in the past several months with the ADP versus the actual numbers that are coming out of the government. So we'll see what happens. I'm not sure it's going to be material. I named this thumbnail employment to surprise with a question mark. I'm not sure it will, but I think where we're set up here from the markets is still looks to me there's a continuation. Looks like we will probably catch a bid. We also have a long weekend coming, and so far, I guess my schedule, I just want to talk about that. Going next week, it looks like I'll have clear sailing for the whole week next week as far as having videos on time. So we'll do video on Monday afternoon, Monday evening in Eastern time, 6 p.m. I'll come in on Monday and do the video. So, just a quick comment. Everybody have a great weekend, long weekend, and enjoy here in the U.S. anyway. All right, so let's talk a little bit more. Tomorrow we also get PMI manufacturing. That's expected to be 47. I've talked about this. All the manufacturing numbers are under 50. There's a contraction mode going on there. That's been across the board, and that is really been very, very consistent for the last several months. And this goes back, if we go to services, it's plus 50, 52, 54s, and on manufacturing, it's below 50, mostly 46, 47, no matter whether it's ISM or IHS or any of the other measurements that are out there. They all seem to be in that particular configuration here. I'm just reviewing my notes here. Yeah, so it was a pretty flat day with S&P down 0.16, NASDAQ, of course, up 0.11, and Russell down 0.19, and 7 of the 11 sectors were negative, and we did see healthcare, a couple others, a little more negative than others, but basically it was a flat day. There really was, I wouldn't call anything material that happened. Database, I got a lot to talk to you about there. Things are happening very quickly, so let's go ahead, get into the WaveTech database, and if the weather cooperates here, it looks like it's slowing down finally, and maybe we'll have some opportunity to look at some stocks or some other things at the end of the video tonight. So hang in there to the end. So let's go ahead and take a look at the database. So here we go, folks. We're looking at 29.40. Yesterday, we were 20.79. So check it out, 3,937 buy signals for this morning. So all of a sudden, the database is rotating very quick. I was talking about 22.28. We already punched through to 29.40. Next numbers really don't matter until we get above 42%. And one of the things that I talk to you about all the time is that once we get above 42%, then there's a material amount of stocks. Right now, there's 10,970 stocks that have no trends, nothing on a short-term basis. Now, the key, and I'll go over it because this video is for Friday. I'll discuss the intermediate database, especially for those that are using WaveTech or Portfolio Expert. You're going to be interested in at least the expectations for this weekend, for this long Labor Day weekend. So, but as far as everything goes here, on the short-term basis, we're definitely getting some traction. And this has been happening for a while as we seem to get this traction at it's sold off. We went from 80 to like 12%, like overnight. It felt like it was, I think, about 3 weeks. It was very quick. Now we're seeing this quick rebound. I have to tell you, I've watched this database for decades, and in the last 6 months, any of the rotation has happened very, very quickly, both on building back the material number of stocks to really set up some sort of bottoming pattern versus just liquidating. I mean, we got into full liquidation mode really quickly, and we went down I think to 12%, and here we are back at 29. So there's been a fair amount of selling. Let me rotate out. You can see the models here, and this gives you the last couple of weeks. There has been here where it says model 1.2 and 3.2. I'm just rounding these numbers off here, but it looks like almost 7,000 plus stocks on the buy side versus only about 1,500 on the sell side, just rounding numbers. So these are a lot of buying going on while a bunch of folks were getting pretty negative again, right at the lows again. And I will, that call down to 43.50 was pretty amazing, because that's exactly where we stopped. So let's go ahead and get into the technicals. All right, so we'll start with the S&P on the hourly. And I've got up the market flow indicator. I'll show you on the daily as well. This thing has been doing very, very well. We did get, I think, the second hour this morning, we got a sell signal here, and it looks like we've got some downward pressure coming into the markets. And we'll go through the market grid number here in a minute. But we've got some pressure. Typical timing somewhere around the London Open or so is when things will start to flatten off and maybe stabilize overnight ahead of the report, which makes sense. And it does look like forecasting as we come into the open, and we've got the news out on the unemployment that looks like it wants to improve. And I'll show you on the daily chart as well that we're really still looking at some positive flow coming into the markets here, even though today felt negative, and maybe for the next couple hours there might be a little negative push here. Although, yeah, we're up a whole whopping 25 cents right now on the S&P. So nothing really going on here. But like I said, the downward slope here in this pattern is pretty substantial. Did get that sell signal. That's 9 o'clock. That'd be noon today in New York. And we had the buy on this surge the other day, and it stayed all the way intact there. So let's go ahead and flip over to the daily chart. And I think this has been somewhat interesting. We did get a buy signal right on the day where we had that big giant reversal and that rejection off of this number. The market flow actually issued a buy signal here, and this was a pretty decent run. Now what's happening as we look at this, it does look like we're kind of peaking out. I had looked at this prior to the open, and it was still on a positive. So it's flat, but we are at 0.27, which is trend mode. And I'm not sure. Looks like some of the indicators aren't on here that I need. So let's put them up there. Let's go ahead and just put up the 10, 21, 40, and the 200 here. So we're looking at really the 40s coming through flat. This 10 is still rising, but it looks like we could see some loss of momentum. So maybe we're going to get sideways here for a couple days, and we'll see how this thing all sets up. It does look like to me that there's still a shot to rise up in this pattern. I mentioned these fib targets last night, and whether these get hit or not is going to be interesting. I'll look at the weekly chart here before we move forward, because I think the key is going to be that we've got there's still plenty of upward momentum, but there's some resistance overhead here. And I think we got up to what? Just looking at the numbers here, 45.41 was the high yesterday. So I've been talking about some of these numbers. The old fib targets we're at 45.73, and then we got an update yesterday for 45.88. Whether we get there or not, I'm not sure. Looks like we're going to probably consolidate and maybe go flat here based on what the algos are telling us. It was looking a little more positive prior to the open, so this is my first glance into the open as well. So just know that when I had looked at them pre-open, it was still forecasting a little higher, but a lot of times you'll see just the flat is okay, but then it does look like as we come into Tuesday of next week, we're looking at maybe some movement on the downside. So let's take a look at the week. Before we do that, let's go to the market grid. Yesterday, market grid was S1 45.12, R2 45.48. The range was 45.12.75, and S1 was 45.12.80. So it went to exactly to the S1 number. R2 45.48. We fell short. 41 was the high. R1 was 35. So we traded just above the R1 number and then faded. Now the key number to watch here for tomorrow, folks, and this will set the tone as we come in for the weekend and we come into next week, will be that pivot, that those red dots there, 44.94 to be exact, 44.94.15 is going to be that number. If we close below that number on Friday, that would suggest we're probably going all the way back into the moving averages, back towards the 10-period moving average, and we'd see that's what is being forecasted here on the algos on the PPM1, PPM2, and 3 are all flattening out. So that's very possible what we're likely to see here. We're starting to see, I'll see if I can blow this up to see if you can see these numbers a little better. It's kind of hard to see the market. The webs I have the webs up here right now, and they're starting to get crosses over. So it looks like to me, if we had to come up with anything, and let me just put something in here just to emphasize where I'm talking about here. Let me move this out of the way here. This area right here is probably what we're going to get is some sort of consolidation in there. We did get a bit of a reversal. We managed to close lower today. Follow through. Watch that 94 number tomorrow. That's going to be your key. Yeah, Fernando, send us an email on that, would you? We've gotten a lot of emails. Thank you. We'll figure it out. Don't worry. Just hold off until we get it figured out for you. Okay, so this pattern is exactly what's likely to happen here. We're seeing the market grid turn down tonight. There's a number of things that are happening here from the standpoint of this pattern. And so good place to stall, just under 4,600. I'm shocked, folks, that we got back over the 45 handle. And like I said, I think this red dotted line at 44.94 is going to be kind of a pivot above and below. It looks like mainly because we have the 10-period moving average coming up in the pattern as well. And let me just get you a value on that number. It's 44.56, and the market grid low 44.69 for today. So look for that 94 number, folks. And as far as the market grid numbers go for today, I would go with S1 is 45.05. It's interesting. S2 is 44.92. Maybe that gets tested. So S2, R1, 45.26. And look for the R1, S1 numbers to be pivots. And what I mean by that, we take out S1, then we're going to test that 92, 94 level, that key number. And if we take out the R1 number early in the session, then we'll probably print up towards the R2 number, which is 39. And that would put us up just below where we printed yesterday. And, so that that's how this looks. So let's go over to the weekly. If you remember at the beginning of the week, I thought we were going to get what we were going to get is a configuration that was, we'd get an inside week. Well, we didn't get that. We actually traded all the way up to RXT on the weekly, 45.38. We actually penetrated through it. 45.41.25 has been the high so far this week. The low, there's also a pivot number here at, let me just get this number for you right here. Yeah, it's 43.95 at 44. That was the weekly low was 44.14. So we didn't quite get to that, just above it. We kind of opened flat and just rallied right out of the box. We're back over the 10. The 10-period moving average is up 0.28. The algos are look like stabilized. So there's going to be somewhat of a magnetic, we'll call it, field keeping us right near this 10-period moving average. So let's, so that looks like to me the algos are going to stay strong, and the extreme pattern, that 43.50 is still the extreme. We could set up even more, but we did get the market grid to turn up on the weekly this week. That's the number to watch when we get an update on whenever we start trading. I think there'll be some trading on Sunday, so it'll get triggered on Sunday. What we'll look for is some kind of up, whether the market grid turns down or up. That will give you a little bit of a feel for what next week will be like, and I'll cover that on Monday night when we all get together. You know, one of the things I realized that I omitted on my coverage of the database, and I apologize, I didn't go through the intermediate. This just brought it up as I brought up the weekly chart. My intermediate expectation is that we will continue just to be stable. We're going to stay well over 58%, I believe. So I know this is out of context. I apologize for that. So here's the NASDAQ weekly. We still have that upward slope. We're back above there. There is some acceleration going on here on the weekly numbers. We're currently at 0.30, which is trend mode, and it is projecting to continue to increase. So like I said, on the futures, look at this number here, this 10-week moving average, to be somewhat where the market's going to stay around a little bit above and below that number on that slope. Whether we can get any kind of acceleration, it doesn't look like it based on the dailies. So let's go over to the dailies here. Yeah, so look at the daily on the NASDAQ. It looks a lot different here. We've got some pretty good slope, although the PPMs are starting to flatten out. And the key number, the pivot on the NASDAQ, is going to be right here at this 40-period moving average, which, let me get a number for you, is 15,390. That's going to be your support. If we get below that, then there's a possibility of trading down into the market grid a little further than that. 15,390 matches up fairly good with our S2, and then S3 is 15,363, and STX is 15,308. So we could get a little bit of a motion tomorrow from the standpoint after the numbers, and especially with the long weekend ahead of us. So tomorrow's action will be pretty interesting, I would think, from perspective. But watch those numbers that I'm talking about. This pivot, a close under this 40 would be negative, and on the S&P, that 40 4494 number is the number to watch there. All right, so the Russell is set up pretty much like I was talking about. This is a daily. We're basically rejecting. We got just shy of that fib target 3, which was also the 40. That was the point where we should get a rejection from. And I would argue that we're probably going to set up some kind of right shoulder, and we're probably going to come back into this range here around 1870, somewhere around there. I would suspect. Let me put RTY up for a second here. We'll get, I suspect we're seeing, yeah, the market, as I suspected, the market grid is turned down. So that was the cash market we're looking at. So this downward slope of this 21 is going to really pull that market lower from that standpoint. There is some fib targets there. 1892 is the lower end of that range right in here. So there's still some downside, but I think ultimately the 10-period moving average in this pattern will be the extreme, which is 1878. All right, so we're going to the 10-year next. We continue to drift down. Fib target 2 is right here at the fib target 2 is 402. We printed down, let me get some numbers here. We printed down to 407. We'll call it 408 is low. I mentioned in last night's video, I think this 40-period moving average will be the point where we hold. You can see the algos are all starting to turn up, so it looks like maybe we come back into the pattern after the employment news tomorrow, which should stabilize. There's another one of these wedges that I talk about all the time with these that are formed with the moving averages. Algos all turning up, including even the 200 on the bottom here. So let's take a look at the weekly 10-year. We're right down almost to that extreme support that I talked about. I'm actually shocked that it got down there, but it is there. And that number is 403 is that extreme. We also have like this another pivot number here at 401. So a break under 401 would break the pivot as well as the 10-period moving average at 403. And that would set a pretty negative tone. And it does look like, folks, that the weekly is starting to focus down. As I mentioned, I believe in the last couple of videos, I've talked about how the configuration on the longer end of the market is sloping down. I think part of this was the Treasury changed its strategy for this week. Everything they offered this week was on the short end. The longest maturity they offered was, I believe, a 7-year. Everything else was in very short nature, and including down to 6-month T-bills and even shorter periods than that. So everything was on the short end. So they're just filling some gaps in the schedule. And if you recall, when we did get that little burst a couple of weeks ago, what happened was there was a big offering and the announcement on all the long-dated treasuries they were going to offer. And of course you don't hear anything from Fitch or Moody's anymore, because that was just a way to capture some headlines and put all that together. And I would say that that there's probably a little probability that the treasuries are going to fail. If you look at the auctions, all of these ones I just mentioned, they're all well covered back into close to that 3-to-1 plus area. And the shorter term stuff just get gobbled up. There's plenty of action here, in spite of all the talk about the BRICS and all the different dour issues and things of that sort that we have going on. So good news is, folks, I think I won't have the information I need as we come into early next week on Monday that I'll need to do the longer term outlook. So possibly I'll do that on Tuesday, and the potential, it may not be till the following week until we get into after the first week of the final month, first week of the final month of Q3, right? So we're starting to set this thing up as we coming into year end, and I've been going on and on. I haven't, first time I mentioned it tonight is that third week of September target zone. There seems to be a lot of things aligning at that. So I'll start to zero in on that after next week. But the 10-year looks pretty solid here. If we go to the 2-year, and this was it's starting to roll just a little bit. We finally got through that 10-period moving average. You can see it looks like it's all downhill from here. So potential for going to 470, 450 on the 2-year. So the front end of the curve is starting to flatten out. And I may have to moderate my view on whether the Fed's going to raise rates again. But for the moment, I'm still kind of sticking with the story here. I'm not sure that these numbers that we're seeing are enough to change them. They might do one more little shock job to see if they can upset the markets a little bit, and then maybe we're onward sailing with rates starting to decline. If you look at the forecast here, I realize this is like the long-term weather forecast, which means almost next to nothing, but we've seen some of these longer forecasts be fairly accurate. And what I'm seeing right now is, at least in the short term, the next 2-3 weeks, looks like we're going to come down into one of these wedge formations, and ultimately, like I said, get down to 475, maybe 460 on the 2-year. So all of a sudden, all these yields are starting to roll back a bit, and that could carry us all the way. If you want to say it's an election year, it looks like rates are going to decline as we come into next year. And I don't know, will that be because there's actually a real recession, or will there be some other events that happen, or will that be because inflation is perceived to be under control? And all I know is, if this is right and we don't go into recession, Jay Powell and the boys and ladies get A++ for what they've managed to navigate through and changing the rate structure of actually the planet, not just the U.S. Everything changed everywhere, and that is a significant event. And to manage it and not see everything blow up, that would be pretty amazing if this is how this game ends up playing. All right, so crude oil, here's a weekly chart. Bounced back again today. Continue to work that range. All of a sudden, we're back at 83.69 high. Last trade, 83.52. We have this higher fib target, 85.28. It looks like that should cap out. Look at the PPMs. Look at the forecast. This is looking to be at least the final momentum peak of this rally. We could still roll back here a little bit and just start to go sideways. But I suspect on this weekend, when this market reopens, you're going to see the weekly grid actually turn up. So we could see some further advances, even though these indicators are turning down right now, that the grid could turn up, and that key level is going to be right here at that 85.15 level, rounding off there from that standpoint. Looking at the daily, daily is also peaking out, and interesting. It looks like we got an RTX sell signal. Let me verify that. 83.13, 83.61. Yep, we got an so we should go sideways for a couple of days. We hit fib target 1, 83.79. The high has been so far 80, 83.69. So we're right there. And fib target 2 and 3 don't look very likely. It looks like we're trying to roll this thing back. So expect to see a little sideways to down on this thing as we finish off the week. All right, so gold will be next, and we're looking at some upward slope here. We're looking at a crossover. This is a daily chart in the next couple of days. But it doesn't look like the forecast is going to make Peter Schiff happy at all. Looks like we're going to see more downside. We're probably going to test some of these support levels down here on the 10. I would expect to see that hit and be hit. The 40 period moving average right now is at, let me get the values here, at 1956. We could head back towards that level. We've got a fib target above, which is right on the fib target 1, which is up here at 1982. And we printed a couple days ago. We did print up, let me get a number here. We did print up to 77, but it looks like we're going to flatten out, come into these values, and then it looks like, once again, being forecasted a downward momentum starting to build and a trend potentially starting here on the downside. Quick look at the weekly. Really just flat, and I've covered this. I still think we stay within these parameters here between the 40, which is right now the 40 is at 1929, the 10 around 1953. We do have the 21 is the highest average here, 1969. So expect just to continue to chop around in there. So interesting, Bitcoin on the daily, weekly got rejected off those higher numbers that we were talking about yesterday. That number was 28. This is a weekly chart. 28.14. The 10 period moving average 28.704. So we came just shy of that and came up to the market grid number 28,439. So we came just short of RXT, got a rejection. We're back down here and we're printing down toward this fib target 1, 25, let's see here, 25,539 with a last trade of 26,037. So let's go to a daily chart here. At this big ramp up the other day with the market reversal, and then here we are. Now we're trading down below all these averages. The only thing that's going here is we do have the potential for an STX buy, which really just sets us back into this pattern. And we're just working this giant pattern, which is also the pattern that I was mentioning on the weekly chart as well. All right, looks like we have time. We're at 44 minutes. I'll do a couple stocks here. Apple's still climbing higher in this pattern. We got through this pivot. Does look like momentum's peaking out on the short term, but the PPM2 is still expanding and looks like we've got a shot to continue some overall pattern. I think this was probably a perfect ABC pattern. I don't think... let me go to the indicators here, and let's just put let's put the pattern finder on here. And this is almost a perfect. I'm going to put one more thing on. Let's put not only the pattern finder. Let's put the fib projections here. All right, no pattern being projected, but this is almost a perfect one, what I call a 1, 2, 3 pattern. We came right down into the moving averages, everything, when we came down to this low, if you look here, all the algos and everything PPMs were turning up. It looked like we were going to get a rally. We're probably going to come back in here. It looks like everything's peaking out, and with this PPM2. So how to read this? PPM2 is upward slope, but what that's indicating is the red line, which is the 21 period moving average, you can see it starting to roll up. So typically in this type of pattern, even though the PPM looks positive, doesn't mean the market has to go up. The market always telling you is what's going on with the moving average, and that if we hit those levels, especially if we hit these levels coming into second week of September, that's going to be very strong support. So that's just telling you this is where the support levels are. The PPM 1 is going to tell you that the potential for, once again, in that second week, that maybe we challenge these moving averages. But my expectation would be we come back in here. This is a daily. We'll take a quick look at Tesla. Tesla sideways. We got the RTX sell signal 2 days ago, basically 2 days sideways. Looks like momentum's trying to peak, but there's still some upward slope here. And this pivot above the market is the big number to watch here. Could be a rejection point. That's going to put us right here. Let me get that number. Make sure I've got the right number. Looks like 267.70. That's going to be your most likely a point. If we did trade up there to get a rejection, most likely we'll go into a sideways pattern, very similar to all these others. I also do NVIDIA. NVIDIA is also starting to top out. This is daily chart on a short-term basis. Looks like we should test over the next, we'll call it 2 to 3 sessions. We should test the value of this 10-period moving average. It's being projected to be here as we come into next Tuesday. We're looking at 482. Depending on how this thing sets up, we should still have a positive slope, and the markets continue to work out. You can see the forecasted uptrend. Like I said, this is quite a few days out in the future, I believe. Let me just look at the setting here. Yeah, it's 50 days out in the future. Like I said, that'd be like trying to predict the weather 50 days out. That's probably not going to happen much. Yeah, I'll just take a couple things from the field here. We're looking at this is a daily chart on MindMed. Wish I hadn't done that. There we go. So forecast is for us we do have fib targets up here, and those numbers are at 3. Or let me just get the high 425, 445, 458. We printed 431 today, so we're looking at some potential, but it looks like momentum is going to stay positive on this stock. But it's pretty sloppy pattern. Let's take a quick look at the weekly. Weeklies, the stock's been hammered down. Unfortunately, there's not enough for the algos to work here. But the PPM1 is at a plus 0.12, PPM2 is 1.56, and PPM3 is a plus 1. So these are pretty robust numbers. Let's let's try to zoom out a little bit and bring this in so you can see this pattern. So it's a little bit of a wedge, maybe a 1-2, maybe you're going to get a 3. So if you have the indicators, just put the fib targets on there. It should pick up this pattern, and it's at least probably looking at, we'll call it $7 plus on the upside. All right. So here's Shopify. Same thing here. Don't have enough data for the algos. You know what I'm going to do? Let me just go through the pane here. Let's move. What you can do if you have the indicators, if you're not getting a forecast here on any of this stuff, you have to change the coefficient. Look back to 50. There's probably not enough data there. You'll see now it's calculating. The same thing with all of these numbers on the upside. So like if we want to see the forecast here on the WAITAR forecast for the 10, then what you're going to want to do is change that look back to 150. And this, we've had some questions come in and people asking about, well, it won't calculate. We're not getting any calculations because you don't have enough data. It needs 150 bars back. And depending on the stock or where it's at, you can lower that coefficient. It still works pretty good at 50, but the preferred setting is 150 look back. You get much better accurate. So you can see what the forecast is there. So yeah, it would take me a little bit to change some of these numbers, but let's go ahead and I'll look at one more stock that's being suggested here. So this thing's on a rocket ship here. It looks like we're starting to get to some peak values. It looks like we could get an RTX sell signal. This stays like this tomorrow. Pretty impressive rally. We went from, let me just get some values here. Went from $7 to 21. Nice little gain. This is the weekly chart. So you broke all the way over the 200 week. Don't know what these folks do, but they're doing something right at the moment anyway. But it does look like we're going to go sideways. Probably get an RTX sell signal and flow sideways into this number. Yeah, this is interesting. So I went a little long term here and brought up the monthly chart. So obviously these folks had some event that just happened, looked like earnings just came out. There we go, earnings. Yeah, surprise. But yeah, so this looks like that the monthly will probably consolidate. You usually, when you get a spike up like this, these are some of my favorite. You get a spike, you usually sell into this. If you're a long-term holder, then maybe you have a different opinion on this stock. But you should be able to see this probably hold the 40. Worst case, you come back into these moving averages, and this is going to be a slow burn back in unless there's some crazy news that's just going to drive this thing into some kind of like viral YouTube video or something. Okay, folks, that's going to do it here. Thank you again for watching. Thank you to everyone. I'm incredibly grateful that bought the indicators. Been a crazy week for us here. And don't miss, there's still an opportunity to get that discount. And like I said, we did announce that we're doing this affiliate program. And I know we've got folks that have been asking us for something like this for a while. And wow, my light just fell off my desk. That was interesting. But anyway, yeah, so we have we've had a lot of requests for that, so we finally worked in getting a program together, and it is going to be somewhat exclusive based on some of the criteria that we'll talk about with you in the Zoom meeting. And like I said, send the video, send the information, anything that you want to say to us. We get some unsolicited videos and emails the other day from some of you, so appreciate it. Tell us how you're using it. Tell us about how you want to be part of the affiliate program. You're going to be impressed with what we're putting together here, folks. So anyway, thanks again for watching. Have a great long weekend, those of you in the U.S. And I have a good day trading tomorrow. We've definitely got some news and some potential volatility, so watch out for that. And then I'll see you Monday, same time, 6 p.m. Eastern. Have a great weekend, everyone. Thank you again. Yeah, there won't be any membership fees. You just have to get accepted into the group. So just send us anything that you want. Thanks again, everyone. Yeah, I have a Substack account. We'll be releasing some things there as well. Thanks again for watching. Have a great weekend, everyone.